Hey, it's Andreas. I've been investing for over 10 years, and in today's video, let's take a closer look at PRCH Group earnings. We will go over the presentation that you see here that was released to the market after hours yesterday. Immediately upon release, the stock dropped 5%. And then as the earnings call progressed, I will talk about a bit what management communicated, some of the errors that was made, some of the potential opportunities, and then talk about how the stock continued to fall and also if I would still buy this stock today. Let's just take a quick look at performance right now. So we can see that the stock is down about 30%. It was down a lot in the pre-market, bouncing off slightly above $1, and then as the market opened, we can see extreme volatility here today. It recovered a lot, up to about 15% loss, and then it fell again. And it's been an absolute roller coaster of volatility in this stock right now. Also, in terms of valuation, we're seeing some interesting things. We're seeing that the market cap here for PRCH Group is very, very low again. 119 million as of now, and in terms of price to sales, also very attractive metric with current pricing. We can see that valuation is at one of the lowest times ever here in terms of enterprise value to revenue. Enterprise value, remember, it's the market cap plus the debt minus the cash position, and we see just a massive drop here. And we knew that there were some bad storms in Houston that was going on, and the stock sold off from $4 down to 2 something, and it has slid a lot here. But then apparently the market had not priced in everything yet, and it continued to fall when the news of the catastrophic weather events was reiterated. Anyways, let's get right into the presentation here. The Q2 2024 earnings report for PRCH Group with management. You see them on screen. Matt Ehrlichman, the CEO, owning 90% of the company. Sean, the CFO, talked a bit about the numbers. Matthew talked a bit about operation and product velocity. And then Michelle talked about a new initiative in the data science department where they had been working for 2 years. And it's almost like maybe they watched my videos regarding the value add of the data that they had, because this is the exact pitch that I reiterated some videos ago that Michelle had, and it's clear value in it. We will see how it's able to integrate with major advertising platforms. If it's able to make some sort of customer match list out of that, it could provide a lot of value and be sold as a subscription service. But it's going to be interesting to see execution in this department for sure. I will compare this to Lemonade as well, because there's some shenanigans going on with the valuation here, in my opinion. Disclaimer: a lot of future-looking statements, and some of these are non-GAAP measures as well. It can be subject to change if the auditing does, and PRCH Group takes no responsibility to make future updates to this. The standard disclaimer here before earnings reports. Agenda, you can pause and read if you want to. I'll move straight along. In terms of the Q2 update, we had reiterated here 2 bad storms, wind related here, one of them in Houston, and we saw this as a 1 in a 10 storm basically, so something that homeowners of America had not seen during the years of the operation. And as you will see in revenue guidance, this had a massive impact. I think it was bigger than I anticipated, bigger than a lot of other investors anticipated, and we're seeing big reactions as a result. In terms of the financials here, we can see that total revenue grew. So revenue for the quarter, almost as big as the market cap of the company at this point. We'll compare this to, for example, Lemonade, who's growing a bit slower here in terms of their growth. They are less profitable, but they have a fancy app and a market cap that's 5 times larger, selling insurance. In terms of cost of revenue, they have had strict cost controls in this case, and we can see that they've been effective at it. It's a tight run ship. I think that maybe this could be worrying to investors that, all right, well, if they cut costs, then maybe we saw a bit of disgruntlement among employees, but it was highlighted that they were still voted a great place to work, continued, so maybe not something to worry about. Anyways, big shock in terms of EBITDA, big loss. We will see the impact that this has on guidance as well. Not good. We heard about a potential flywheel ahead in terms of the liquidity for homeowners of America here. I didn't like this part of the presentation. Stock price dropped while this was being presented. We're seeing that this news here regarding a reciprocal exchange, it has not been done yet with Texas Department of Insurance. And this was supposed to be done last year. I talked about it. There was some fraud with the partner. They're going after them, suing the partner, but that's no excuse. We heard that the catastrophic weather events was very bad, caused a lot of losses. And I didn't like how management said that, all right, this is out of our control. We focused really hard and we executed super hard on everything that was in our control. We had the cost controls, we had less loss of premiums, and were more effective with the insurance that we were underwriting, and we saw increased margins and stuff. Yep, you could have picked a better reinsurance partner. You could have been reinsured already. The market hates this type of volatility, this type of uncertainty. This was a bit of a gambling not having done this yet, and yes, now we're taking a loss. And even though management in the Q&A talked about this is not going to affect the future growth, we still have the same growth outlook, we haven't changed that. Well, it could make them more careful in writing policy. We could not see as fast growth as we want. And then, of course, we have to readjust stock price down. So big reason here not having had reinsurance in place. Reinsurance, I know it's this reciprocal part. It's not a blanket for fixing all, but it lowers volatility. And in this case, with 2 1 in 10 storms, they would still have had to pay up. They will most likely have maxed out limit on the reciprocal, but they would not have lost as much money as they did in this case. Key update, some new product velocity, seeing good results. Launched home factors data product. We will talk a bit about this later. I don't think that filed a suit against 2 parties regarding this reinsurance fraud should be a key update. It's a legal battle. They're going after some wrongdoing. It has nothing to do with the business going forward, trying to build a business that will last for many years to come and perform great and give great returns. It's just noise in the background. And then recertified as a great place to work. I think that maybe some investors didn't realize why that was a key update. We saw a slide about cost controls earlier, and then it can be very important to reiterate that the company morale is high and that employees are still happy at the workplace and performing good, doing deals, doing what's needed to be done, and with cost cuts, there could be some disgruntlement. So I think maybe that's the reasoning behind why we're seeing this as a point in key updates. That's what I'm thinking in terms of an investor perspective, but maybe it's just something that the CEO wanted to highlight as well. That could be the reasoning behind it. Results and guidance here from the CFO as promised. We're seeing the same slide again with revenue, with cost of revenue, with the EBITDA loss and the gross written premium. Some more coloring in here regarding the different growth in the different segments. We're seeing that the insurance segment is driving growth massively. And this was something that Matt Ehrlichman talked about in the interview back in 2021 as well, having the software platform and then building a massive insurance platform on top of it, so clearly executing on that. Revenue by segment here, even more coloring. Total revenue growth, insurance segment doing the big growing, and then vertical software seeing a drop. I want to give some more color here because in the Q&A we had some questions regarding the housing market, the stagnation. We're seeing home sales volume here being decreased 3% year over year, and the analysts in the call were curious regarding, all right, what if the housing market recovers? Will you guys see a greater upswing or not? And the answer there, I think, was very good. We're going to see more companies enter the market when it goes into a bull market. So it will be more companies to sell to, more companies to partner up to, and it will be a greater increase in revenue than just recovering with the market. But the guidance that they issued, very important here, a recovery in the housing market is not priced into the stock at this moment. I repeat, a recovery in the housing market is not priced into this stock. Very important, and important to keep in mind when we see guidance. So lowering interest rates, obviously, when people refinance, move around more, it's going to be a good piece of news for PRCH Group. A terrible market right now, just awful. And we're seeing once again a lot of focus here on the impact of the catastrophic weather event. Let's just call it CAT event here to make it short. We're seeing that they talk about how if this had not happened, we would have seen amazing results. But this variance obviously caused performance to be very bad, and the cost was 11 million better than anticipated without the CAT event. So very bad, obviously. Claims cost 23 millions here for those claims. So that really helps explain the guidance. In terms of the EBITDA loss here, we see more coloring on it as well. And then we're seeing also a slide regarding the balance sheet, talking about operations cash flow, free cash flow, and just a strong balance sheet in this case, in my opinion. They needed to fill out some more in Homeowners of America. However, in terms of the debt situation for PRCH Group, we saw two big notes, one financed at 6.5% and another one at below a percentage point, but it will have to be refinanced in 2026 at the latest stage here. So it could be some bad news regarding that as well if they have to refinance at a much higher rate. So once again, we're seeing the interest rate sensitivity. Obviously, it has punished a lot of companies with these higher rates. PRCH Group not sheltered from that, obviously. And here we're seeing the adjusted EBITDA guidance update. There is a better slide for this, but remember, in terms of EBITDA before, we saw talks about 2.5 to 12 million in terms of the profitability, and now obviously it's a loss. But there's a better slide regarding profitability than this one. Here we are seeing that slide indeed. And on number 3, adjusted EBITDA, as I stated previously, 2.5 million to 12.5 million. And the new range here is just horrible. 20 million in the negative to 10 million in the negative. Not at all good numbers in terms of the full year. A major backlash. Does it affect the long-term business? Will we see another big storm causing big problems and perhaps being bad for the balance sheet? Well, I compare these losses to cash and cash equivalents, and I'm not at all worried regarding that. Maybe some investors are, but I don't think that there's reason to worry about that. I think that the balance sheet is strong enough in that regard. Also, the second half of the year tend to be the best year in terms of weather, in terms of very few claims. That's always been the part of the year where PRCH Group has had amazing performance and where I've been able to rake in the big gains. This was the same as last year almost, with not so good volatile results in the beginning of the year, and then an extremely strong recovery by the end of 2023 that just made the full year results for 2023 amazing for me. Will we see a replay of that old favorite? Perhaps. There's no certainty. Past performance is no guarantee on future result, but we're seeing this sell-off here in H1, just like last year basically. Gross written premium unchanged. We're seeing revenue unchanged in terms of the growth. I'm not 100% certain on this guidance, neither is the market, and that's why we're seeing such a large drop, 30%. One of the worries that this creates, not good having worries, is alright, what if they scale back on growth and focus even more on profitability now, and they're not gonna grow as rapidly, and we're gonna see the results that we want slower. We're talking about very nice premiums in 2025 from insurance, being very, very positive, very far away, and right now, we're seeing not so good profitability and stock being punished. Remember, minus 30%, have to say it again, maybe put it up, boom, big in red on the screen, minus 30% on the day. This is 300,000 something, close to 400,000 I think. Haven't logged in and checked the portfolio. Drop in value of the portfolio for me, so very big drop in single day. This is, believe it or not the largest drop I've seen in a single day, but results still extremely strong. Remember, just 4 years ago my whole portfolio was 300k. So I'm no stranger to sitting through these extreme events, and always having to ask yourself when you're doing investing in small cap, alright, is this something that I can handle the risk tolerance of? And in my case, I've been tried and tested in the market many times. This is just another one of those times for me. KPIs here from Chief Operating Officer. What are we executing on? We're gonna see some on the software margin here. We're seeing that broadly in line with prior quarters in terms of companies utilizing the services. The most interesting part here for me was the big increases that we saw in revenue per company, and also we saw the big increase in premium for policies on insurance. Just a massive gain. I think that they need to increase this by more. We're seeing this bad weather events. It's hurting the industry. It's hurting insurance companies. Insurance companies need to be profitable. They will all raise the cost to insure the homes. This will happen. They've already done it a bit for insurance. Now they're gonna rise it even more because of these weather events. We're seeing some in Florida. We've seen the companies withdraw from insuring certain areas where they're having to go to state insurance as a last resort. This is becoming an issue where some can't insure their homes. And we're gonna see prices increase even further. So home ownership, not cheap. Insurance premium increasing as a result of these weather events, whether it's the fires in Hawaii, California, the flooding in Florida, the storms that we're seeing, now these extremely high winds that we're seeing in Texas. Some might point to, for example, climate change, and I think that consumers are gonna accept this as a reason for why their premiums are gonna go up a lot across the industry. And I don't think that lawmakers can do anything regarding this because it's gonna be industry-wide. It's not cartel action. It's gonna be a response to market conditions. You can't operate a business at a loss. It needs profitability. And then they gotta increase the premiums, and well, those big premiums that I talked about in 2025, they're gonna be even bigger because trust me, these policies are gonna get a lot more expensive. So that's the growth of profitability and revenue from the insurance industry. I think it's 70% of revenue, something like that at this point, whereas software is 30%, so it's growing fast. Insurance segment here, a lot of written premiums, annualized premium per policy up here. We're seeing to $2,000 from $1,600 the same quarter last year. As I talked about on the last slide, we're seeing increases and expect even further increases on this area. It will be expensive to insure your home in the future. That's the bottom line. We're seeing improved gross loss ratio here. It's gotten better as a result of the data that they have to be able to see the results from home inspections, to see regarding the homes, and then adjust the cost of the premiums in accordance. Gross combined ratio here improved as well. Quite interesting regarding the catastrophic weather loss ratio as well. Not good numbers. Not good numbers. Underwriting, pricing, and update. They're talking about the 3 Ps here. I think that's a lot of marketing terms, but just talking about earned premium per policy increasing. Proven track record of the data actually working. That's what we're seeing here. We can compare them to, for example, Lemonade, where they have their fancy app that just asks you a few questions regarding name, where you live, some basic stuff, and they give you a quote. Here we're seeing a real data advantage, in my opinion, and I think that the market cap does not reflect this at the moment. A deep dive here into home factors, the marketing aspects. They have this data and they're able to reach movers really quickly, first in line, and that's a lot of value. We're seeing property data here regarding the home. We're seeing consumer data regarding behavior. When you're targeting on large websites, for example, if you're doing this on Meta, you can see who's riding the train to work, target based on that, target based on certain interest. Well, here we can target based on certain consumer indicators as well, such as life events, for example, here, age, lifestyle interest, and moving status as well. And we're seeing different areas of data. This is valuable because this increases the amount of conversions that companies make. Basically, in common speak, the amount of product that you can sell to consumers so that consumers consume more products. That's what it's all about. That's what Google is doing so great. Meta is doing so great. A lot of these advertising companies are doing fantastic, and that's because of the data. It's just insane the amount of targeting you can do. Trust me, I used to work at Google. I've used Facebook ads in the past, worked with that as well. So just a massive advantage today. And not only that, that's the training data for AI. They mentioned it shortly. They don't have to build their own AI on this. They just have to have all of this data collected from the customers, and they will be able to buy a service, third-party service from the market leader that's going to emerge in that area, feed in all of the training data, feed in the results of policies, who's collecting a premium or not. They're going to match this data, and then they're going to see, all right, what type of indicators are risky and what indicators are not risky. They talked a little bit about it on the slide here. I don't think that it was a very thorough explanation. I don't think that they explained it super well with regards to this. We're talking about corrosion, we're talking about rust and water stains as an indicator of potential future water damage. We're seeing that I did the analysis regarding a company where they have a home camera that's monitoring, and they're partnering with State Farm regarding that. So that's a bit behind this service, in my opinion, where it's just the home inspection that's collecting all of this data. So looking at competitors, I think that they're ahead in this area. They're ahead in terms of the data advantage. Just need to be sure that the AI model works, that it does its job, that we're continuing to see great execution, and that they continue to retain premiums here. We're seeing a suggestion here regarding that 65% of policy holders should pay more if we look more into the data, so it can be improved even further. And then interesting language here that 30% of policyholders qualify for a discount. Of course, there's not going to be any discount. This is going to be pure profit for the company. They can use it to retain market share if it's a lot of competition. But these are the high value customers that you want, that are low risk, that pay a nice price for the policy, where you have a very good chance to make a lot of money. I always say about insurance companies that no one really wins except for the insurance company, and that tends to hold true over time. I think that Warren Buffett would agree buying into Chubb in his case. Some case studies where they have utilized this. Of course, they need references to be able to sell the data product. I hope that they're doing it as a service so that they can have perhaps live data feeding into large advertising platforms, that they sell it as a subscription, that it's going to be updated with the latest data from home inspections or whatever it might be, so that they own it and it can be fed into systems used for targeting on who to show ads to. That's something that you can charge a premium for. Indeed, it's something that's very important for companies as they set up and try to get first-party data. We're not only seeing this from PRCH Group. For example, if you have a running app, they will ask you to register your shoe in that app, and then as you run, it tracks the usage of your shoe. And when you run a certain mile, then you're more likely to replace it. This data is sold to a shoe company that uses it for retargeting. That's just one example of how this data is being used today. They're collecting the data when you purchase with your credit card after having viewed an ad. Offline conversion is the name of that. And there's just a ton of tracking from all different platforms. PRCH Group being no different. PRCH Group being part of the data economy. I think it's the oil of our generation. Oil fueled the industrial revolution. Data is what's fueling the AI revolution, and PRCH Group is sitting on a ton of it. They just need to monetize this unique data, and that's the real gold mine in the company that I think that the market is overlooking. Wrap up here from Matt Ehrlichman. The tone, not very good, sounded a bit insecure here, the different executives, and I can understand when you see stock price dropping like that. Didn't like how they shifted responsibility. We executed extremely well on everything in our control. Well, if you give away responsibility for something, well, then you're just saying that you're basically a victim in this case and you can't do anything about it. Of course, it's their responsibility to lead the company into profitability. They could have done that with reinsurance. It was a miss. The market recognizes it as a miss, and the company's stock price is being punished. Not fun as an investor, but I think it's a temporary setback in this case. And in my case, still up big on the position. Bought it at slightly above $1 in average purchase price. Bought a lot at $0.50. Extremely volatile. It's a small company, only 100 million here in market cap. Very, very low. Compare that to about 1.2 billion in market cap for Lemonade, and they have about the same numbers in terms of revenue coming from the business, with PRCH Group not only having insurance but also this software segment. I just think that it's the better business comparing them to, but of course very, very risky, very, very uneven earnings. The market hates unpredictability, and when analysts feed in these new numbers for guidance, these new numbers for revenue, profitability into their models in the investment bank, they're not going to like the outcome either. The decision is going to be a sell. That's going to be the safe decision. They have quarterly targets that they need to reach in terms of the performance that they get, and there's no way that managers are going to let them just sit through and ride through this stock. I made a video a little while back talking about ownership, how institutions own a little more than 50% in the stock, the CEO owns 19%, and then us retail investors 20 something. And as that massive stake of institutional investors trade, depending on what's going on, it's gonna just have a huge impact on the volatility. We've seen massive swings in stock price, but the volatility swings both ways, and when the positive news comes, then the stock goes up extremely quickly as well. And just to do the wrap up, Matt Ehrlichman, see you guys next quarterly earnings. Let's wrap it up. Let's get done with it. Let's swallow this poison pill and move on. That was the feeling that I think he had as he wrapped up that call. It was definitely the feeling that I had watching the call. And then as well seeing the pre-market, the after hours in this case. It dropped a lot more than just 5%, which was the initial drop once this presentation that I just presented for you guys came out. As they continued to talk, the market didn't like what they hear, and the sell-off continued. And when they sell off, it's a trend, it gains momentum, then it usually loses a lot more. Made a video just a little while back talking about how fears of a slowdown in the economy caused the Nikkei index to drop by more than a nuclear power plant leak did in 2011. It dropped by 10.5% back then, and now 12.4% here on fears of slowdown. So just massive volatility today in the market, and that's what we're seeing. And of course, reiterating here, focused on full year profitability goal. And no need to say excited on what is ahead. We're very excited to present. They all say that on every call. Just say it with excitement in your voice instead. That's it. That's the presentation. Then the Q&A. I already touched briefly on some of it. Another note, not super great coverage, not a lot of questions, very few questions, wrapped up early, one written question. I would have loved to see some more questions to the data science part of this presentation. It was indeed overlooked by analysts. I don't think that the market realizes the value in this data. They kept asking regarding guidance, regarding the things I covered for you guys in this presentation. I think it was like 4 or 5 questions, with people having 2 questions each. But that part of the presentation was completely overlooked. And with regards to that, I think that this stock, it still holds a lot of value. Of course, it's never fun to see a drop this big. It's not nice as an investor, but that's part of the deal when you're compounding and growing money over time. So now we're back to very low valuations, very low price to sale, a extremely small market cap. We can compare to, for example, Lemonade here, that also dropped on their earnings, but we're seeing a market cap here of 1.1 billion American dollars. And if we look at the results of this company, we can see, for example, 122 millions in revenue for the latest quarter. And if we compare this to PRCH Group and their latest quarter, they also had 100 million something in their numbers. Just 110 it was, yes. The guidance, the expectations was 116 and they had 110. So they come in a bit short in terms of expectations. But, you know, comparing to Lemonade, comparing to another insurance company, we're seeing greater profit margins. We're seeing faster growth here in the past, and in terms of revenue we're seeing about the same, but just still this massive difference in market cap. And that's, you know, how you present to the market. The market loves everything tech, they love everything AI. They talk about their AI app that, you know, I've done the research on it. I looked at it. It asked these little questions, this little formula, and then they just get a quick quote on insurance. But the market loves technology. You get funding for that as soon as you put tech ahead. And in the Porch Group earnings call, they mentioned AI only a single time, and then you're not going to get the same valuations. You're not a tech company. The market is not going to look at you like that, even though you have great data and you have the foundation for it. And that's a bit frustrating as an investor to sit and watch through. I will not rant and rave a lot about it. It's part of investing. And would I still buy the stock? Yes, indeed. Valuations are very low. Will I buy more of the stock? No, I will not. I already have more than 50,000 shares in this company, and that's substantial enough that if the company outperforms and performs very well, then indeed this will make a big difference for my financial situation. I will be close to my FIRE target. It's just a bet that really can pay off. In terms of the valuation that we saw in the past, this $21, that's what you get in a low interest rate environment when you have the growth. And those were indeed the glory days that I think a lot of investors are reminiscing about in days like this, when the market is absolutely dumping not only smaller cap stocks but the magnificent 7 here. We're also seeing the big tech sell-off recently. Very, very difficult times. Seems to be holding the line now at $1.20. Even tempted to buy some more actually, but I shouldn't do it. I should do the smart thing and build another bet that have the potential to make a massive difference in my life. I've been able to build a position in Palantir as well that will make a difference, and a position in MPW that will make a nice difference. And I could build another position in another company that would actually make a difference. I won't diversify it above the number of 7, then I will need to just refill into current bets, because you already get the benefit of diversifying away black swan events. But if I diversify too much, then it's just gonna be an index fund basically. So that's my thought process regarding that. Alright, I hope you enjoyed. I hope that this provided a ton of value for you guys into the business beyond the headlines, because I realize it can be super scary seeing a massive drop like this in a single day. So I hope that this video was able to give you a lot more coloring into what's going on, why the stock is dropping so much, and just provided a ton of value basically. Alright, that's been it for this video, and as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.